Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently, what we think is likely to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. It's the first place we go to notify you of everything that is going on in the crypto space. So keep a finger on the pulse of crypto by joining us down in our Discord server. In this video, I will be using Elliott wave theory. It is reasonably complex. It's easy once you kind of know what to look for and all that kind of stuff. So I have created a 21-part video course that's available on the cheekyschool.com, linked in the description below. Check that out if you're looking for more information on Elliott wave theory, how to read the charts, how to draw Elliott wave theory yourself, how to trade it, and all that kind of stuff. And it will help you follow along in these videos a lot more easily than just kind of looking at all these lines thinking what on earth is going on. And so check that out, linked in the description below. We've got 50% off at the moment. Okay, let's take a look. Bitcoin paired up with USDT. Now, before we jump down into this chart, I want to focus in on this one. This is actually Bitcoin with USD paired on the weekly chart, and Bitstamp is our data source. And I want to focus in on this area just here. This is a death cross. A death cross essentially is a 200 EMA crossing the 50 EMA, or a 200 SMA crossing over a 50 SMA or whatever, right? Essentially, it's always 200 across 50, and there are two variations. We have the death cross, which is this one here, where the 50 EMA crosses below the 200 EMA, in signaling that actually we're bearish because our price action is now weaker than it was over a 200 average period. And then you have the more aggressive in the way of bullishness, which comes in the form of a golden cross, where the 50 EMA crosses above the 200 EMA, signaling actually the short term we are moving up. So this is telling us basically that the last 50 candles here on the weekly chart, the average price has come down lower than the average of cross 200 candles. Okay, so it only shows us what's already happened. It doesn't show us what's going to happen, but it does obviously, you know, create a little bit of fear when they call it a death cross. Okay, and essentially this is going to have a negative impact because people will react to it. Okay, there'll be an overreaction to these two lines crossing over. It sounds bonkers because, you know, essentially all you're doing is looking at the history and then reacting to what's happened in the history that's already occurred, compounding the issue and making it worse. But nonetheless, it will have an emotional reaction, and traders will obviously take advantage of that. So retail will react negatively because it has this big scary name, and traders will short the market, dragging down further and all that kind of stuff. So you'll see that it will be something that will get utilized by many different people in the space. Okay, so I just wanted to kind of highlight this. It's on the weekly chart. You can check it out for yourself. Bitcoin USD pair, 1 week, Bitstamp, you can see the 50 crossing the 200 EMA lines. Let's come back down into this one then. So following on from our conversations yesterday, we were, of course, talking about this triangular wedge. We were talking about this potentially being an A, B, C, D kind of E kind of thing. We actually saw this break upwards, which would have to put our D wave out of this. I don't think it's a good fit for a triangle, so we'll kind of just forget about that. But it does look to me like we coiled up nicely and then broke to the upside. We actually went straight past our supply zone and straight past the 1-to-1, straight up into our big boy supply zone. This is the area that we was kind of on the fence about whether we're going to reach it. Been talking about it for such a long time. It's good to see that we're finally there. This is, of course, 17,274 to 17,447. There is a lot of selling pressure up in this range. This is an area that we kind of consolidated on quite a bit in the past, so I'm not expecting us to push on through it. It's possible, of course. I wouldn't expect it. We'll see how things kind of go here. You can see that we actually saw a little bit of kind of action in the last hour or so, with some move up and a move down, kind of liquidating people, kind of grabbing a fair amount of liquidity right in here. If I throw on the HTF liquidity finder, you can see there's actually a lot more liquidity to the downside now than there is to the upside. There's not a lot here to grab, so liquidity is actually a little bit lower now. You can see it all around these areas of demand, right around here as well. Okay, so brace yourselves is kind of where I want to kind of say with that. Now, the other thing that's worth noting And before I talk about it here, I think it's probably worth coming up into our daily chart to talk about these. These are obviously where we have the higher highs and the higher lows, and these typically break to the downside. You can see these time and time again, all over the place. Higher highs, higher lows, break downwards, right? And if I come over here where we have the lower lows and the lower highs, we break upwards, right? So if I zoom out of this and we can kind of take stock of the lower lows, the lower highs breaking up, the lower lows, and the lower highs breaking upwards, right? We can see all of those time and time again. And then vice versa, when we see the higher highs and the higher lows, they break down. Higher highs, higher lows, break down. Higher highs, higher lows, break down. Now, why do I talk about these? This is obviously the daily chart, kind of shows you the bullish angle and obviously shows you the bearish angle as well. And I'm speaking about this because on our hourly chart here, if I make this a little bit bigger and zoom in on our hourly chart here, we can see something quite interesting happening right as we approach our supply area here. So let's go ahead and grab ourselves a parallel channel. And what I'll do is I'll anchor in on this top one and I'll throw this here, and then just bring it down here. So here we have higher highs and higher lows. And as I was just saying previously, that essentially higher highs and higher lows tend to break to the downside, not to the upside. So we should be aware that things here aren't looking too great. Now we can continue to run up here. We don't have to come down straight away. And on my expectation is that we do push up a little bit higher, more specifically around the 17,333, approximately something like that. I'm pretty certain that is kind of what I had drawn out in one of my other charts here. Let me just check this out. Yeah, so about 17,334 under this kind of structure. That's kind of what I was aiming for. So let's bring this back up into here. We can kind of see ourselves doing this channel, coming up into the higher highs, the higher lows, probably push up a little bit higher, and then we're going to break on down. Okay, this is a typical finishing pattern here. Nothing too much to kind of note on that other than the fact that this is reaching our supply zone. This is our upper area. This is the area of our C wave, and that C wave is nested inside our B wave, and our B wave obviously is targeting out down here towards our previous lows at around $15,000. What's going to be the catalyst to push us down there? Probably the DXY pushing up, because it's the DXY pulling down the way that it has done, that has essentially caused us to rally up. And you can still see the DXY going down as crypto kind of pushes up a little bit further. Okay, so when the DXY starts to reverse and goes to the upside, we're going to see cryptocurrency pull to the downside. Okay, these things always reflect in the opposite way. And the reason for this is this is a dollar index, essentially the value of the dollar. And obviously assets, although we buy them in the dollar, they're not valued in a dollar. We all have an understanding of the value of something, and it's outside of the currency that we see in the fiat sense. And basically, as the value of fiat goes down, in the case of the dollar index here, then you're going to need more dollars to buy the assets, right? So there's not that there's a lot more demand coming in here, pushing the price of Bitcoin up. That's not what we're seeing. All we're seeing here is the underlying asset that is used to purchase actually get devalued, meaning you need more dollars to buy the assets. That means that this is an artificial pump. It is not actually driven from demand for the assets. And there's a little bit of FOMO kicking in from retail, but essentially here, we should definitely be thinking when this DXY goes up, all of those gains that you've just seen on your portfolio are going to get wiped out incredibly fast. Okay, and do I think the DXY is going to be dropping down, or do I think the DXY is going to be going up? Well, just like everything else, it's the direct opposite on the DXY than it is on the cryptocurrency asset. Take a look at Bitcoin, for example, and it will be overbought on the stochastic RSIs, yet here on the DXY, it will be oversold. They're the opposite. So when we have the technicals indicating that we need to go down, you're probably looking at the technicals looking at the DXY going up, for example. Now, if we take a look at the DXY on a daily time frame, we can see that I've been mapping this out as a potential kind of idea of a five-wave structure moving up towards the 120 range. So this is just a kind of typical kind of area of retracement, nothing unusual going on here. And again, I wouldn't say that it's a really good analogy to use Elliott wave on here either. So we'll kind of keep that open-minded to see whether or not we do end up with these kind of more bearish times or more bullish times. So I'm quite happy either way, as long as we have a plan for whatever happens. This is the key takeaway that not a lot of people tend to talk about. And that is essentially that we need to have a plan no matter what the outcome. Okay, so if we are in a bullish market now and we are to be moving up, that's fantastic. Have a plan and buy the retracement and the dip, right? If that's what you believe. If, however, we are, of course, going to be seen as in a bearish market, and in which case have a plan, have a strategy for that as well, right? I always know what to do if something plays out, regardless of what the sentiment might be and what our kind of narratives are being told to us, right? At the moment, As I've said many times before at this point, we've kind of reached the higher expectations on where we kind of the thinking Bitcoin could go, along with other cryptocurrency assets. We're in this kind of higher high, higher low kind of channel right now. This typically breaks down. So my expectations are that we've kind of met our requirements. We've entered into our big boy supply zone area. This is where the sellers are. We kind of see that now. We threw the liquidity on here. We can see that there's a lot of liquidity to the downside, not a lot of liquidity to the upside, and therefore the most likely scenario here is a breakdown to the downside. The DXY will push up, and all those gains that we saw come in will disappear very, very rapidly. That is where my mind is at on BTC. And of course, we can jump down into the wallet counts. We did see a little bit of fluctuation with our retailers, starting to come down just a fraction here in terms of the number of wallets holding this Bitcoin. And of course, we can see a little bit of an uptake with our whale players. We're looking for the retailers, so our shrimps, our krill, our shrimps, and our dolphins. We're looking for these guys to sell their Bitcoin to the large big money whale players in order to really get confidence behind the narrative shifting from bearish to bullish. But we haven't seen it yet. So for now, we kind of rely on actually, it's business as usual. We're still waiting for lower lows and all that kind of stuff to come on in. And nothing here has changed that. We haven't seen the demand coming in. We have not seen the inflows and the outflows dramatically increase, indicating that we have significant demand here. Instead, we have nothing more than demand being met but equally by the supply. So yeah, essentially nothing new to kind of really talk about in signs of that. We are still in a bear market as far as I'm concerned. We have no trend to the upside. We're below the macro level 200 EMAs. Not only that, we do not have any 5-wave impulsive structures indicating that the bear market bottom is in. We don't have any large outflows occurring. Instead, all we have are inflows and outflows kind of dancing around each other. We've got retail investors maybe possibly looking to sell off a little bit, but they haven't dropped down anywhere near significantly enough. The whale players are starting to look at buying, but haven't really bought anything too major. So until we start seeing big purchases being made, until we start seeing massive outflows and very few inflows, or more specifically, the net difference between those two things really quite widening, and we are seeing accumulation at the top level from billionaires and multimillionaires, I'm not going to get too excited. I do think our macro position here remains true. I do think we're going to be looking down at 15, and then once we do 15, I do think we'll have to have a bounce upwards before coming down towards the 13.9 to 13.2. All of that is still very much in play, and whatever it is that's going to take us down there, whether that is going to be more bearishness from crypto exchanges going bust and the fallout of FTX continuing and the contagion of all of that, who knows? I'll leave that for you guys to discuss in the comments down below. Let me know what your thoughts are overall in the crypto market and for Bitcoin. Other than that, guys, hit the like button. I appreciate that. Join us down in Discord. And if you're looking for more information, then why not check out 𝗕𝗘𝗪𝗔𝗥𝗦.com. Until the next one, guys, have a fantastic day.